Asian markets to start off are doing quite well.
The Federal Reserve, after that one meeting pause, was back at it again, raising rates in July.
The index were to hold 19,620. You're in a pretty good place.
Mahindra & Mahindra has said is that they have bought 3.53% stake in RBL Bank.
Many of the transformative deals have hit sudden brakes.
US sales are estimated to be around $210 to $215 million on a quarterly basis.
Very strong opening, so the market, it seems, has digested that US Fed rate hike.
Objective was very clear, right? We did want a wider range of investors to look at us.
FOMC was, hawkish with the hike.
Trading below the 19,800 mark, but the mid-cap index is going pretty strong.
IMD has once again upgraded its alert to the red category.
For the markets, at the day's low is where Nifty is at.
Well, it's not a good-looking screen. I mean, it is what it is. We're down 100-plus points on the Nifty. That was the day so far. You're with us here on a fresh new edition of Closing Bell. We're coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Reema and Surabhi here. Nigel is joining us from the newsroom floors. Guys, hi, good afternoon. So there is a bit of a pullback, which is very, very evident. Actually, if you just put the Nifty intraday up, it'll tell you that the high was right at the word go at open. And since then, it's basically been lower. One way, slow and steady, but lower. 19,667 is where we are finding ourselves at. That's a 0.5% cut as things stand right now. So this is about levels then. By the way, it's of course also the expiry. So maybe at 3 p.m. Will something play out? We'll watch. But the levels are on your screen. On an intraday basis, watch for break. We're already below it, 19,688. So in the next 60 minutes, if you're able to kind of reclaim that, great. On a closing basis, and this is the level that the market bounced off from, and then we had 2 days of very strong rallies, was 19,620. So that was on Monday. So on a closing basis, the market needs to be above it. Above it, I mean, there are still chances for upside. The trend remains up. Below it, things start to become a little muddy. Like Tuesday, the Nifty Bank index has tested the 38% retracement of the up move. We're basically looking at the last up move and looking at 38.50 or 61.8% retracement on both the Nifty and the Bank Nifty. So for the Bank Nifty, that level is 45,673, and I think we are just above it, So we'll see if this comes into play. But the market on Tuesday on the Bank Nifty did bounce, touch it, and then bounce above it. The sector of the day is pharma. The last I checked, the index was up 4%. But of course, it's not a banking or a IT, so there's no huge weight on the index because of what's happening to those stocks. Mid caps and small caps, there are the indices are up 0.25%, etc. But lots and varied kind of stock activity in that part of the market today as well. Reema.
Hi, Prashant. It's also a bit disappointing, right? Exactly last Thursday, the Nifty had gone very close to the 20,000 level. It went to levels of 19,991. This happened on Thursday. Then on Friday, Monday and Tuesday, the index was practically unchanged. We were just consolidating. Yesterday, the index made a pretty good up move, almost went to the 19,800 mark, and in the morning we had a gap up opening. So you just got the sense that after 3 days of consolidation, maybe once again, the markets are going to make a dash higher. But that has been, those have been false hopes. And the markets, as Prashant pointed out, have seen a pretty big fall from the top of the trading session. We're looking at a 200-point cut from the day's high, and that's pretty stark. In terms of sectoral moves, it's quite apparent. On the way down, you've got the FMCG names under pressure, whether it's Tata Consumer, Britannia, Nestle, ITC, across the board. There is red on the screen. Reliance Industries is a heavyweight, which is struggling in trade, and that's down nearly 1%. But the day belongs to pharma. The Nifty Pharma Index is a gain of 3.2%. It's just been climbing higher. It's a one-way chart up for, Nifty Pharma, barring the last 10 minutes, where we have seen a bit of a slip, at 3.2% higher. And look at the individual names, Surabhi, and the way they're flying. Cipla, lifetime high, 9.5%. Sun Pharma, Divi's, Apollo. The top 4 Nifty gainers are all in the pharma pattern.
Absolutely. And it's not just the large cap pharma names, by the way. Even if you go beyond the Nifty 50, you have so many other names. Look at a Gland, for instance, which is up and about, Syngene, Aurobindo Pharma, lots and lots of pharma names that are literally sparkling green this afternoon. But beyond that, we've had some very interesting result reactions as well, and I'll try and be the optimist out here. Tell you first about the earnings on the upside in terms of movers in the last couple of hours. So Colgate, from the word go, has probably been one of the brightest earnings in the FMCG space, and that stock's been up in about, look at that, 7% and counting. Vesuvius is the other one. Blowout numbers, 20% there. Birlasoft's numbers just came in. They've managed a 3% growth, and the market will take that, along with the margin expansion, the market will take that with both hands. Some other names, REC, Westlife, these are all stocks reacting to good earnings. Negative earnings reactions, we've only got two. One is Johnson Hitachi and the other is Arvind's numbers, which came in just a while back. They have not really surprised the street on the upside. In fact, if anything, it's a bit of a downer on Arvind. And that's a stock that's down. That's Johnson down about 8%. Arvind's also down 4-5%. But hey, let's not forget, we've had plenty of excitement in the primary markets, and NetWeb is casting a spell with Nigel, I think it's an 80%. Yeah, still holding on to that 80% up move. So individual stocks, there's always plenty of action out there.
Well, indeed, Surbhi, it's a bit of a down day today, but otherwise it's going to be the fourth straight series that the bulls are going to be in control, and that we haven't seen since May 2017. So 4 straight winning series, that's not been seen. However, the final day, it appears it's belonging to the bears and positioning as such that it's going to be a bit of a hurdle to get to upper levels. Now, we're seeing aggressive writing at around the 19,750 call. Out there, more than 1.2 crore shares have got written. So in all probability, in the next 60 minutes, we shouldn't see that level. 19,760, we shouldn't see a level above that. On the downside, though, the 19,700 put, there as well, we're seeing some writing. What's happened in the last 20 minutes? If you look at the Nifty, it's moved lower. So that's support level of around 19,760. Well, that's in a bit of a doubt now. So we need to keep an eye out on that one. 19,670 on the downside. We're trading a little below that level. So let's see whether or not we see a bit of a bounce from here. But if we continue trading at these levels, we could either easily dip another 30, 40 points odd. Options data is suggesting this. 19,700 put was being written, but that's in danger now of those put writers. They could have to throw in the towel. So let's see how this goes.
Okay, well, Nigel, thanks very much for that. So that's basically levels clued in and picked up in terms of positioning on the F&O side of things as well. Well, numbers are coming through thick and fast. IEX numbers are at the bottom of the screen, and I've been told that I think Colgate has made a new new all-time high. Its numbers, I think, were good. Markets likes it, and you got a pretty good reaction. IEX, though, is slumping a little bit. EBITDA is flat. Margins have shrunk on a year-on-year basis. I don't think for IEX there were estimates really, but that's the first cut reaction on the stock. 10% growth in profits. How should you position yourself in the last hour of trade? That's the question. Mitesh is here to tell us exactly that. Mitesh, hi. I mean, so we got that up move, and you were saying that perhaps at high levels the market will find resistance. It has found that resistance. What now? What next? And what would you do?
Dr. Prashant, I was talking about 19,650 as the key area. We are right there. And to be very honest, in the morning, I didn't envisage such a steep decline because the first hour was very strong. And we were trading closer to about 19,900. But assuming that, this level gives away, that, if 19,650 breaks and we could know that answer in the next 15, 20, 30 minutes, then I think, we are looking at this decline possibly continuing to about levels of 19,500, 450 zones. And that's the minimum target, which I think the Nifty could do. And then there's also a chance of testing about 19,335, which is an important daily average place. So I think overall the pattern isn't very positive. I would hope that 19,650 holds. And if this holds, then we are back into that 300 point kind of consolidation. Otherwise, there will be some profit decline or a pullback, whatever you want to call it. But in the short term, that will create some price pressure and we'll see Nifty move on the downside. Some stocks are also giving breakdowns, and I've got a sell on Bajaj Finserv. That's, after a good rally, showing signs of profit booking. So I can be selling here with the stop at about 1635, and I would look for targets of roughly around 1580. While Birlasoft, it's come up on the day's high, the pattern is positive. So here, long position with the stop at about 390 can be taken for targets of 422.
Okay, those are some trading ideas. Let's get you the big CNBC-TV18 exclusive. We learned from sources that Cipla promoters are looking to sell part stake in the company. The company has also issued a clarification, a statement to the exchanges. Nisha is here with the details. Nisha? Thanks for that, Reema. Yes, sources with direct knowledge, at least 3 independent sources have confirmed to CNBC-TV18 that the Cipla promoters are exploring the option of selling part stake in the company, and they are in talks with several private equity players for this transaction. We do gather that amongst several private equity players who may be interested, Blackstone as well as Baring Asia have shown more inclination and are even looking at stitching together a consortium for making a big investment in Cipla by buying out a part of the promoter stake. Remember, promoters hold 33.5% stake in the company. And also, we do gather that this is on account of 2 important aspects, a 2-pronged approach for the promoters which they're trying to solve here. First of all, the succession planning, that is lacking in the company, and that has been one of the aspects that the investors as well as experts have always questioned them on, because the second generation of founders of Cipla are octogenarians now and still active, though respectfully. But on the other hand, the third generation has only one, Samina, who's really participating and involving herself in the company. So a leadership and the succession planning and clarity on that is extremely important. And this particular private equity stake sale could be a step in the direction of solving for that succession issue. And secondly, of course, the strategy overhaul and to improve the operational efficiency of this particular company, capital allocation so that the return matrices are improved. We have seen in the case of JB Chemicals where KKR took a control deal and now the matrices are looking far better. So looking at that success, private equity industry has been very, very buoyant on the pharma industry. They find any such opportunity also very attractive. But remember, the only problem in this particular deal is that the check size could be very large because Cipla is a very large company, and for private equity, it'll have to shell out a huge amount of money. So that's where the talks are. Cipla didn't respond to us, but has given one clarification to the exchanges. We reached out to the promoters. They have not responded to our query, and Barings as well as Blackstone have also not given us any comment on our query given to them.
Okay, Nisha, got that. Thanks very much for that exclusive. To the stock exchanges, Cipla obviously only maintained that they're not aware of any development which would require a disclosure under the listing regulations, at least as of now. That's Cipla up about 9%. So that's one story that's definitely catching the headlines. But even before Nisha broke that story, the stock was anyway up and about on what's been a phenomenal quarter for Cipla, specifically some very impressive numbers on the US market side. Ekta is standing by with not just Cipla, actually, the fact that it is a phenomenal pharma day in totality. Ekta, tell us more. I mean, they've really got the market's attention, all these pharma names.
Well, it's definitely the blockbuster numbers which have come out for Cipla as well as Dr. Reddy's came out last afternoon, but the rally is continuing into today. So I just wanted to start with the numbers, both for Cipla as well as Dr. Reddy's. It beat estimates, but even Syngene, which is basically the research arm of Biocon, that too saw growth of around 25% year on year in terms of the top line. Now, focusing on Cipla as well as Dr. Reddy's, one of the key drivers this quarter was the US business. Both of these companies reported a better than expected US business. US sales for Dr. Reddy's stood at $390 million versus $310 million Q-on-Q, and for Cipla, $222 million versus $204 million in the previous quarter. One of the key reasons for that is the contribution of Revlimid generic this time round. In fact, it's been quite significant for this cancer drug, which is contributing to multiple companies. IFL says Dr. Reddy's, the estimates are $50 million Q-on-Q increase on account of Revlimid generic sales. And for Cipla, it would have probably accounted for 60 to 65% of the Q-on-Q growth in the US. Now, there are other factors which have aided sentiment as well. So, for example, besides Revlimid generic, there was some amount of stabilization in terms of price erosion, better base business performance, more confidence on the US markets. And for Cipla in particular, it was the guidance with regards to the margins as well as the US business which really fired up the stock. So the margin guidance is now 23 to 23.5%. US sales estimated at $210 to $215 million. They are confident on drugs such as Advair generic as well as Abrixon generic. This is despite possible regulatory issues at their Indore facility. Now, the other factor which has really fired up the stocks has been after Nisha's story, which is basically the fact that Cipla promoters might be looking to pare some amount of stake. What it has done is that it has put light on the possibility of M&A of other promoter-run companies in the Indian pharmaceutical space, and the list is long. So, for example, we have the likes of Dr. Reddy's, Lupin, Biocon, Glenmark, Divi's, Sun Pharma, Ajanta Pharma, Alembic. All of these are promoter-run companies at this point in time. Many of them, investors have questioned their succession plans as well. So maybe there is a correlation which is taking place. In any case, we've seen a lot of interest in the pharmaceutical space when it comes to M&A. For example, we had KKR, which bought out JB Chemicals. The stock has risen 225% since then. Ipca Labs acquired the Unichem promoter stake just a couple of months ago. I'll leave you with the valuations. Many stocks are at fresh 52-week highs, life highs, and the valuations are looking punchy for some of them as well.
Okay. Ekta, thanks very much. That's a very well-rounded perspective and look at what's happening in that space. Mitesh Shah is pharma analyst at Nirmal Bang. He's joining us now. Mitesh, you heard my colleagues Nisha sort of reporting on the story with regards to Cipla, where the promoters are looking to sell some stake. Ekta, of course, with an overall picture. What would you make of the rally? I mean, I'm sure that you're getting some query from investors, etc. as well. What are you telling them? Overall picture, I mean, is it, first of all, what is the driver for this move? And what would you say is the road ahead, near to medium term?
Yeah, good afternoon to everyone. So, major pain point for the pharmaceutical sector is US price erosion, double-digit price erosion, and the issues about the stability of the base business. With the Cipla's call yesterday, I think the price erosion definitely will be coming down, but not a price erosion. The volumes are also strong for the base business, and company has indicated that would be remain at least for the near-term point of view, which definitely gives you a better visibility on the US point of view. Apart of US, I think other geographies, domestic and other emerging markets are doing well for the Cipla, and because of this overall, the margins guidance was good, and expectations would be as Ekta has indicated that the other products like Revlimid and the Spiriva would be driving growth for the most of the companies. Base business stability will definitely be supporting to the overall growth and the stability to the earnings for most of the pharma companies. So that would be a re-rating for most of the stocks.
Okay, Mitesh, tell us right now your pecking order, because like you're mentioning, I mean, even Reddy's numbers were good. Cipla obviously has been a complete blowout set. So would you expect more of the same from the other companies as well? I mean, for instance, Taro actually came out with very weak numbers. The US numbers were, I think, not too great. But today is a very different day for the market. The kind of strength that Cipla has shown in the US market, would you expect other companies to also replicate and show the same?
Yeah, I'm expecting a similar kind of growth for most of the companies. You talking about Taro, then if you can see on a sequential basis, Taro growth was also 8% for the company. So that was also a strong number.
Okay, what's your top pick?
We are believing that the US would be definitely a volatile growth. So we believe on most of the heavy on the branded, on the list on the generic. So our top pick would be Cipla, Sun Pharma. On the large caps, JB Chemicals, Agenda Pharma, and the Aries on the mid and the small cap front.
Mitesh, just sorry, one point, since the basic issue is the US generic business. I remember speaking with Mr. Ramesh Swaminathan of Lupin. I think this was in the late June, and even at that point, he was saying that their expectation is for slightly less than double-digit decline. The pricing perhaps is getting a little better, but it is still projected to be south. The direction is south. Is the Cipla sort of takeaway, as you said, in sharp contrast to that? Will you wait for confirmation from other companies as well? Briefly.
So definitely it's early to comment, but the way both of the company has commented, I think definitely it would be a lesser than the high single-digit kind of price erosion for most of the companies for this particular year, or not this particular year, then at least a couple of quarters for sure.
But anyway, I don't think US is such a big business for Cipla. It's less than about $1 billion in terms of overall. But as a takeaway for the rest of the industry. But pharma's clearly made a comeback, right? 2020 belonged to the pharmaceutical sector, courtesy COVID, the kind of sales that we had. And then last year, it went through a bit of a slump. But now with fears of the pricing pressure in the United States easing, domestic business picking up, pharma has clearly made a big comeback. Look at the way it's moved up, from February. It's outperformed the Nifty as well, by the way, since the beginning of the year. The Nifty Pharma Index is up about 17-18% since the start of the year, while the Nifty is up close to about 10%. Mitesh, thank you very much for joining in. We'll slip into a very short break. On the other side, we'll be joined by with Vinay Jaisingh of JM Financial Services on the other side. Welcome back. Now the mid-cap index too has given up all its gains. The mid-cap index was holding up so far, but now it's practically flat. There you have that sharp fall in the mid-cap index in the last 10 minutes. Devain Choksi of KR Choksi is with us on the show now. Devain, top loser today. That's Mahindra and Mahindra. Well, it's lost 10,000 crore of market capitalization for an investment a fraction of its size. What have you made of this decision to invest in RBL Bank? And do you think, this 6% correction in the stock is warranted, or do you think it's a buying opportunity?
Good afternoon, Bima. Well, I think the more important point here is that whether this particular investment that they are making in RBL Bank is synergistic to the business of the company. If it is not so, then I think there is a need to make an investment into this particular company. is something which I think the market is grappling with. I think they are not yet clear about this particular aspect. In my viewpoint, I think if the news item is to be seen as a merit item of maybe I think that talking about I think increasing the stake to 10%, well, I would think that I think that could be acting as a dampener as far as the stock price is concerned. That will not let the stock price probably perform based on the pure auto business. Today, the investors clearly want businesses to be focused, and that is where I think they give the premium to the business. Recent past, I think Mahindra & Mahindra has gained that confidence from the investors. They've gained the premium valuations also to a certain extent within the OE space. And that's where probably I believe that I think to maintain that premium valuation, probably the relevance of the investment into non-strategic business other than auto is something which definitely I think needs clarification. That could be the reaction factor as far as I think the market is concerned.
Well, Deven, the markets have moved to the low point of the day. We're trying to get further clarity with regard to if there is any kind of technical issue. We'll come back to that. But for the time being, the Nifty and the Nifty Bank have moved low. I'm trying to see a few winners, and just one stock I can spot, PVR from the frontline names. That's moved to the high point of the day. What's your view on that name?
You mentioned PVR, Nigel?
Yes.
I think don't have any clarity about I think this particular stock. I think the kind of price movement that we have been experiencing currently do not have I think too much of clarity, except the fact that I think today, I think in this particular year in which we have started, after the opening up, I think the seat occupancies have started increasing for the entire business unit of PVR along with both the brands. So from that perspective, I guess I think that is something to look out for. But immediately on the price movement, I don't have any clear view on that particular aspect.
Okay, by the way, I'm just looking at some of the stocks that have led the market lower. Lots of selling in ITC in the last couple of minutes. Bajaj Finance has moved to the lows of the session as well. These are some of the names which are seeing additional pressure. Both Finance and Finserv, actually. That's ITC for you intraday. Tech Mahindra has again resumed its slide. 3.5%, almost 4% down on Tech Mahindra as well. So these are the stocks where the pressure is showing up. The Nifty is still a good 100 points away from the 20 DMA. So it's some distance away from that level. But anyway, this has been a pretty rapid slide for the index. Deven, since we're talking about some of these stocks on the move, what did you make of Bajaj Finance's numbers? We had the operational update. So, of course, there's no problem in terms of the growth. But I think the market will have to look at how margins play along. How do you find it at current valuations? Does it still make the cut for you?
I think the growth rate of 30-32% in the performance is something which is absolutely very convincing for this company. And as I see it, I think the kind of business model that they have set in respective product category, I think they are probably one of the best examples to take as far as the retail credit business is concerned. I don't see too much of a problem either for the margin, because on the other side, the consumer demand is increasing, and this is where this company is prominently positioned. Because of the high growth in the consumer demand and their ability to lend money at a minimal time, I think given the kind of use of the technology on the front end, in my viewpoint, I think this company is probably has a lot to go and talk about. So from that perspective, the growth in the business is certainly given. If this company grows double the size, I think in a 3 to 3.5 year time, I would think that they will continue to command the attention of investors, and maybe every corrective price in the market would demand some kind of a buying into this particular stock.
What have you made of Colgate's numbers? Devi, the street was very worried that Colgate is losing market share. Courtesy Oral-B, etc. But it's come back pretty smartly. Margins have expanded. It's been a top-down beat this quarter. Do you think Colgate is past all the concerns that the street had in terms of...
Yeah, go ahead. The rural penetration which the Colgate has been successful with, I think that inspires the confidence, because this is where probably I believe that those companies which have penetrated deep into the rural market as far as the distribution of the product is concerned, they are basically finding themselves much better place compared to many other companies which are still not as deeply penetrated in the rural market. At the same time, I think likes of HUL, likes of Nestle and Colgate kind of company, and for that matter Britannia, they are significantly using the tech to generate the kind of a supply chain logistic related issues. I think they're taking care of those issues by way of, systematically, using the IT at the back end, as a backbone. So from a perspective of, I think, looking at the demand generation, if they have a predictive model in place, wherein I think they can figure out from which corner of the country or market I think they are getting demand for a respective product. I think these are the companies which are showing the path. I believe that I think they would probably always carry an edge, largely because of the fact that I think they would be in a much better position to manage their supply chain situation, and I think also demand generation, given the fact that I think they're using IT in the logistics system. So I would probably remain convinced about the rural market, the demand and the purchasing power there for these FMCG companies, and some of the larger ones definitely I think will top the list as far as I think their penetration in the rural market is concerned.
Got it. Okay, by the way, we were talking about the mega pharma rally. Here comes party pooper, that's Laurus Labs. Numbers have missed estimates on all parameters. It's a top-down miss, but the miss on the margin is actually pretty huge. Even the EBITDA is almost 100 crores shy of the estimates that were doing the rounds, the poll that we had. And that stock is sliding off very, very quickly. Let's do one thing. We'll take a break. We'll discuss pharma with Devin, along with a lot of other interesting movers this afternoon. Quick break, and we'll be right back. Devin, hi. Surbhi here. Can you hear?
Welcome back. Intellect Design Arena will be reporting numbers later today, and the stock is sold off ahead of that. So just keep your eye on that. It's currently down close to about 4.5%. But the other one, Birlasoft, has gone ahead and hit a fresh 52-week high on the back of numbers. There is margin expansion. Their revenues have gone up by 1.6% on an adjusted basis, which is pretty good at a time like this. So Birlasoft is holding on to all its gains. Devin, wanted your thoughts in on Tech Mahindra. Now, Tech Mahindra, has reported very weak numbers. The stock is sold off, but there is hope of a turnaround, under the new CEO Mohit Joshi. Do you think this would then be an attractive time to accumulate Tech Mahindra?
So I think the correction in the price definitely, is a definitely good amount of indication that the market is going light on the position, which is fair. I think most of the IT companies are currently victim of uncertainty, which is hovering around in the global environment. But in my viewpoint, and I strongly believe that Indian IT service companies, service providing companies are relatively going to have better times going forward. Because on one side, if the money is not being spent, discretionary spending is not being carried out enough by most of the corporates, across the globe. On the other side, there is a demand, for creating the higher amount of computing, largely because of the fact that many of the companies today also are not under the cloud computing. So in my viewpoint, Indian companies are going to have relatively larger amount of business to look out for going forward. Maybe a couple of quarters of rate cycle hike completing and then certainty returning back into those economies could probably result into higher amount of order inflow for IT companies. But till that point of time, if the order inflow remains muted, in my viewpoint, some of the companies in the front line would remain relatively attractive play. Maybe we have higher conviction on Infosys at this point of time vis-a-vis Tech Mahindra. So we'll stay with Infosys for the time being. And any corrective price on the downside would see this as an opportunity to accumulate further in the board.
Devin, got that. Great speaking with you as always. Appreciate your time here on CNBC-TV18. Vinay Jaisingh is joining us now, Managing Director, Portfolio Management Services at JM Financial Services. Vinay, really sorry you had to wait a little bit today. So apologies for that. Pharma took over, so we were kind of focusing on that early on. Vinay, just wanted to focus on one sector that you like in the light of earnings that we've got recently. I'm talking about specialty chemicals. We've discussed this in the previously as well. SRF numbers recently, right, which came out, and generally the drumbeat that one hears is that specialty chemicals perhaps is entering a maybe 6-8 quarter kind of down cycle from here out. Do you agree with that kind of view? And is there anything to do here with these stocks? SRF is a huge underperformer. I think you own Archean in terms of stock from that particular space. What's the call?
So I think you're saying it right. China growth, which was supposed to come, has not happened, as a result of which the inventory management system in China has increased. And you're seeing a lot of pain in the specialty chemical sector. So that's the reason why I think 1 or 2 quarters more, you would see this pain remain. Having said that, what we are buying or what we have in our portfolio are companies like Archean, wherein we are seeing they're the best on the cost curve. Their raw material is literally water, Gulf of Kutch. So the best in terms of gross margins. Second, net cash company of 5%. As far as their market cap is concerned, they have net cash of 5%. Third, very impressive return on capital employed of 25 to 30% already in a market like this. And when the others would find pricing of bromine coming down being a problem, Archean can clearly produce and make profitability. So when the cycle turns around, which could be 1-2 quarters, we think Archean would be the key beneficiary of this cycle. Having said that, we like the bromine chain. It's moving to fire retardants, moving to derivatives shortly. And the company's production norms also are pretty good. The capacity utilization is relatively inching up. So that's one company we like in the specialty space. But yes, there is pain in the next 1 to 2 quarters in the specialty chemical space, courtesy China.
Hi Vinay, good afternoon, good to see you in. Vinay, I wanted to ask you about 2 stocks that have done very, very well. They came out with their numbers earlier this week. That's Tata Motors and KPIT Technologies. Now you have gotten, I think quite some time back, and you have been positive on it. Every time you join the show, you've been talking about a few of these stocks. What's the view? How much of the good news is in the price, both on KPIT Technologies as well as on Tata Motors?
So let's first talk about Tata Motors. Tata Motors did a good action as well, buying off the DVR, cancelling it and converting it into normal shares at a 7:10 ratio. That reduces the overall share count by 4%. If I look at just purely consensus numbers on an EV/EBITDA basis, they're at 4 to 5 times 1 year forward. Most of the other auto companies are at 10 to 12 times forward. People had questions on JLR turnaround, and here the company is already FCF positive. The demand is very robust for JLR, at least for the next 1 to 2 years. You add that with the good domestic work Tata Motors is doing, and probably a listing of Tata Technologies, which would help it as well. So we're pretty excited about it. Yes, the stock has done well, but next year it will be not just FCF positive, but net cash. That should let the stock also do a lot more better in the times to come. So we're excited on it even today. Moving to KPIT, here there are two angles to look at it. And the first is US having a slowdown? I think the answer, at least in the services sector, is yes. You've seen Fed raise interest rates once more by 25 bips, and you may get one more for the remaining part of the year. The inverted curve in US also tells us between the 2-year and 10-year chart, which is at minus 100 basis points, that you could see slowdowns in the order book for IT companies. And here there's one company which comes and gives you an order book growth of about $190 to $200 million. If I look at the last 5 quarters since they've been giving the order book and just add that up, it's north of about $2 billion, 2.2 times, the overall size of the overall last year's revenue growth. It's seen a 1-year sequential growth of 8% in revenues and a year-on-year growth of about 45+% in revenues. So you're seeing this company still grow in an environment like this. It got the Honda order last quarter, and it doesn't still have a company like Tesla in its order books. So it's doing well on the EV story. And as the EV story gets a lot more automation involved, I think KPIT will buckle the trend of the IT sector. So very excited out here.
Okay, and KPIT has been, of course, a great wealth creator in the last several months. So I guess it's worked really well for you. Vinay, the other stocks that I think your investors would be very happy with would be some of these railway plays. I think you've got Titagarh Rail within the portfolio. You also have some exposure to interesting defense names like MTAR. I mean, Titagarh Rail, if I was just looking at a 1-year chart, just this year it's up to 100%. So what a mover. The question is that, are you still convinced that there's more value left on the table, or do you think that this is a play that's kind of pretty much run its course? You ride it till the tide turns. I mean, fundamentally, what's your call on both defense and some of these railway plays?
So if you look at what the Indian government has done on its budget outlay, both in railways and defense, as far as railways are concerned, they've increased it tenfold. So whatever the number is of 2.4 trillion this year, it is 10 times higher than what it was 10 years ago. In defense, that number is about 2.5 times higher than what it was 10 years ago. Talking about railways first, as Vande Bharat project gets bigger and bigger, you're seeing players like Titagarh Railway increase their order book. Today, their order book is 9x their current year's revenues. So you know for sure, in the next 4 to 5 years, the revenue growth is going to be rock solid. We saw the quarterly result which came out of Titagarh. Their top line grew by some 110% and the bottom line tripled. So what EPS numbers are analysts using? This is still not covered, largely by most of the sell side team. So you're seeing an earnings trajectory move up on the EPS front at one end. That leads to a return on capital employed also move up for the company. And the company pretty much does not have much net debt on its books. So it also got invested by a couple of interesting investors in the shorter term. So I think the story is, yes, the stock has become more expensive than what it was earlier. But the story is here to say, yes, it may go a little slower. But as you see more and more contracts coming up for the railway industry, we'll be looking at Titagarh Railways a lot more appealingly. Having said that, the defense front, not a nine times price to book, but Bharat Dynamics and NTAR, both of them have little different stories. Bharat Dynamics is purely defense. It's got an order book of 6+X, and it's also a export story. Today, their exports are 7 to 8%. They are into missiles. Akash is one of their big launches or brands which they have. And the earnings is growing by as much as 50% for this company for the next 2 years. Again, return on capital employed is what we like in north of 23 to 25%. Yes, the PE is no longer 15 to 20. It's moved to the 20 to 25 X band for F25 numbers. But with an earnings trajectory of that, its PEG ratio is half. So we are excited about Bharat Dynamics even today. In the case of MTAR, it's got a little bit of clean energy story and a little bit of defense story. About 65 to 70% of its overall top line comes from exports with a single player Bloom, which is listed globally, which itself is growing pretty fascinatingly, helping MTAR get more and more order book. So the company's top line is again growing at north of 30% and bottom line in the same range. And return on capital employed at about at about 25%. And the P is now inched up to 30. We like it because of its growth. So what you're looking out here is growth at reasonable valuations for both these stocks. Actually, even the railway industry.
Absolutely. All right. We thank you, Vinay, for joining in and giving us that view. But we have big numbers that are coming in there. And ACC's numbers are a blockbuster set of numbers. The volume growth has come in more than 20%. That's clearly the big beat out there. So from the top line itself, there's a big beat that's further flown down into the EBITDA performance. Just take a look at the margins as well. Much better. Now, the top line is the beat. You had much higher volumes, and that's why the top line is at around 5,200. We were working with the number of a little less than 4,900 crores. So that's close to around a 300 crore beat on the top line. Now, if you're looking at the operational performance as well, the massive beat out there. We'll just have to wait for some more clarity as to how this has come about. But a couple of things that stand out here. The employee cost, well, that's down by close to around 30% on a year-on-year basis. On a sequential basis as well, it's down by close to around 28%. It's coming at around 152 crores, which compares with numbers of close to around 215 crores. Even the power and fuel cost, well, that's come down by close to around 14%. Remember, they're selling 20% more volume, and yet you're having, the costs that are down. Telling you the kind of operating leverage that's played out there. So ACC's numbers, they're looking very, very good. That's the reason why the stock has moved up. In the last few days, the stock had already run up close to around 7-8% or thereabouts. But these numbers are calling for a beat. And unlike some of their other peers, this one has a valuation comfort because it's a large-sized company trading at around $100 per ton. So on the valuation parameter, it has some bit of a support, and the stock has taken off because these numbers are looking very, very good. The fear was that maybe they don't have enough capacity, and that's why, in fact, they may not give that good volume growth. I'll tell you what, the volume growth that they have delivered, at least with the numbers that we have right now, it's the best that we have seen so far. So ACC gets a thumbs up out here. We just have to be a little bit cautious about what are the company sales out there between ACC and Ambuja Cements. But for the time being, what numbers we have, it's looking very, very good. Thumbs up for ACC Limited. Well, it's a good time then to go to D-Street Chatter. Nimesh, sorry I had to steal your thunder for a bit, but those numbers are so good. Tell us, what are you picking up?
Nigel, just to take your link forward on ACC, you rightly pointed out that the valuations are quite attractive for ACC. Also, the fact that it is still trading at a much discount to the open offer price of 2010, right?
Yeah.
The open offer price is 2010, right? For ACC.
Absolutely.
So even that is the reason why, last week we had an UBS upgrading the ACC as the only stock in the cement basket to a buy now. So I guess that also will play out in ACC going forward. Now, okay, coming to the markets now, largely the pressure seems to be F&O driven because of the expiry. So that's playing out in the Nifty in today's trade. But in terms of flows, again, the feedback is it's positively biased. That's the overall feedback. The sector of the day is clearly pharma. Big moves in the pharma names now. Ekta clearly explains as to what is the reasons why the pharma stocks are buzzing. From a dealing room point of view, the feedback is now the investors are looking to chase these small pharma names as well. So even in the broader markets, a lot of the pharma stocks are chased by the HN investor. That's the overall feedback. I guess, as I said, the pressure seems to be largely because of the F1 expiry. If you look at the broader markets, that's been pretty fine. The index is flat, and there are a lot of stocks which are buzzing as well in the broader market. So net, positive day in terms of flows. Looks like the pressure is largely F&O driven, and there is still a lot of momentum in the broader market.
Okay, at least on a closing basis, we'll defend that 19,600 odd mark, which was getting threatened a little bit earlier. But Nimesh, tell us, what are the individual stocks? What are you picking up?
So in terms of individual names, the first stock on my list is Tech Mahindra. We all know about a bad quarter, very, very, very poor set of numbers. But I understand the stock is recovered from the days largely on back of strong flows at HNI. Some smart HNI seems to have bought the stock at lower levels in today's state. So that's overall feedback. That's the first one. The second stock is Federal Bank. This is something you need to track for tomorrow. The stock has been consolidating post numbers, but tomorrow the FTSE rebalancing is going to get effective, which will mean there will be a buying of between 45 to 50 lakh shares in Federal Bank. So that's the second one. The third stock is BHEL. The PSU basket seems to be quite active in the last many days, and today, for a change, even in BHEL, there are very strong buy flows at a leading FIDs. The last couple of days, the delivery volumes are quite high, and that's going to be the trend today as well. That's BHEL. And the last stock is Borosil Limited. This is interesting. The stock for the last couple of days are buzzing in trade. Yesterday there was a large block as well, and I understand a leading domestic mutual fund was a buyer in Borosil Limited yesterday. Just look at the shareholding pattern. There is hardly any mutual fund holding. So it looks like for the first time a domestic mutual fund has entered the stock. So that's why it's coming to my charter list as well.
Okay, well, interesting list as always. Thanks very much, Nimesh, for that. So those are stocks to watch out for. 114 points. I mean, the market is also, making a bit of a recovery, clearly. And just, 13 minutes to go for close. Once again, we've basically at the day's low. The day's low is 19,603. The level which kind of we've been watching and we hit day before yesterday was the 19,620 mark. So intraday we have had a small breach below it. But once again, there is attempted a bit of a bounce. So 19,657, 19,660 odd is where we are at. Mitesh is with us with what to buy today for a reverse trade or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Prashant, I think, one buy and one sell, given the fact that the index is still, trading around 19,650, but we haven't got an hourly close below that. So we'll keep it balanced. Marico is a BTST with a stop at about 549 for targets of 562. And Indian Hotel is something which I would want to take a negative position or a STBT kind of a call. Keep a stop at about levels of 388.5, look for targets of 375.
Okay, got that, Mitesh. Thanks very much for the calls. We'll take a quick break on that note, and we are in the final 10 odd minutes of trade. So let's see if the bulls can pick up some more momentum or not. We'll come back and we will get a conversation going with Amrish Balika in just a bit as well. Welcome back. Just about 7 minutes to go before the day winds up, and the market's been trying to recover from the earlier lows that we had at around 245 thereabouts. Amrish Baliga is with us now. Amrish, good afternoon. Good to have you on as usual. Let's first start with your stock pick, and that's an interesting one, Tata Elxsi, which has been a great wealth creator in the past. But there's an interesting bull versus bear debate around some of these mid-cap IT names now. Tell us why you like this.
See, I mean, Tata Elxsi anyway is a leading global design and technology services company, serving mainly to sectors like automotive, broadcast and communication, healthcare and transportation. Been around for more than 30 years, have about 12,000 employees, serving clients in about 16 countries. And they've been using cutting-edge technology like IoT, cloud, mobility, virtual reality, and artificial intelligence. And in auto sector, they are working on advanced driver assistance systems, autonomous driving, electrification and connected car solutions, which is basically the buzzword now. And as far as broadcast is concerned, they do broadcast automation, content management. In healthcare, they have a digital health platform. Now, the stock had corrected a bit in the last couple of days because the Q1 numbers were flat. In fact, Q on Q, there was a bit of a decline because of higher manpower cost. EBITDA margin had come down to about 27%. And but at the same time, the management is expecting the margins to improve going ahead. And in fact, the Q2 deal pipeline should be extremely robust. And I think this should be a trigger for the stock to move up going ahead. And if I'm looking at the revenue and PAT CAGR for the next 3 years, I mean, that should be about 24% and 22%. So expecting an EPS of about 184 for FY25, which gives me a target of about 9,200, which is a decent move from here.
Okay, that's very well put, very well explained. We, by the way, had the KPIT management with us, just I think 2 days back. And yesterday, actually, we had the KPIT management in the morning, and they were sounding very, very confident about...
They have a guidance, right? 27 to 30%.
And people were saying, why not more?
That was you. You asked the management.
I was just...
Then why aren't you upping your guidance?
And he said... to people.
They said that we'll wait till the middle of the year. Okay,
we asked them that Honda question as well, because JP Morgan, I think, had put out the note that Honda is tied up with a Japanese IT services company. And I think they expressed concern not just for KPIT, but for Tata Elxsi as well. But I don't think KPIT said, well, this makes no difference to them, and the business, etc., is pretty strong. Just Amrish, hi, good afternoon. Any thoughts on what we are seeing today with pharma, and what's the pick here if you have a pick?
In fact, I've been bullish on pharma for a while. Basically, as a dark horse sector, we have seen underperformance for more than 18 months. And now, if you look at the US FDA issues, I think that's mostly a thing of the past. Most of them are getting a clean chit. And look at the performance of the companies. I mean, even if you look at a stock like Cipla, which was an underperformer, look at the earnings. I think excellent earnings. So clearly, I think that'll be a story across most of the stocks. So other than Cipla, in fact, I've been having a buy on Lupin and Sun Pharma, which have done decently well lately. But Lupin, I still see an upside of about 1,300. For Sun Pharma, I see an upside of about 1,280 to 1,300.
Okay. By the way, I was trying to find some more details on this Bharat Forge defense license that they've got. But not too many are available. It just, the release only says that it's a license for small arms and ammunitions. Bharat Forge anyway has been sort of executing these large orders for the artillery guns. Now they seem to have got a license for small arms and ammunitions. It'll enable them to then bid for contracts in the future. Stocks move to the high point of the day. Amrish, very quickly, I mean, in the entire defense pack, which has simply exploded, Bharat Forge relatively has been, a lesser performing stock. Would you look at it at all, or would you stick to others?
No, I don't think I stick to others. I think most of the others which I've been recommended in the past, I would possibly look at booking profits, whereas Bharat Forge is one where possibly I could look at buying if you're talking of the next year and a half, 2 years. I think the issue which could be there for most of the other defense stocks is that the sort of order flows which have been there have been stupendous. And I think that's already discounted in the stock price. Most of the stocks have gone up 3x, 4x, some of them nearly 5x. But then the question is, I mean, how will they execute that? I mean, even for large companies, I mean, if you're getting orders 5x your earlier book size, it could be a bit of a difficulty in execution, and I don't think anyone is really asking that question. So that could be an issue going ahead. So at these levels, when the best is discounted, I think as investors, it makes sense for us to book out.
By the way, there is some expiry-related moves taking place. The Nifty sharply recovered about 100 points from the day's low. 19,600 was the low, and we're closing closer to 19,700.
You know, the low was exactly at 3 p.m. You know, so it's a sharp move higher on expiry day, a possibility that we were highlighting earlier on the upside. I mean, so we'll end down just some 75 points lower, which is a far cry from where the market was. We were down about 150 odd points or so. So this is a decent bounce back. 19,696 or so is where the Nifty is at. By the way, the US setup, when we come back tomorrow morning, it is as we go into the US, I mean, outcome we'll know tomorrow, is not bad. I mean, the US indices last night closed flat, but the Russell was up strongly. The Banks Index was up 1.5%. VIX is under 14. It's pretty constructive out there in the US as well. And of course, the commentary, etc., from the Fed we heard. So good recovery on the Nifty here. The Banks Index also down about 0.6 odd %, but there also there was a recovery, not as sharp as what we saw on the Nifty. The Nifty Mid-Cap Index ends 0.5% higher, almost 0.5% higher. Small Cap Index was more flattish, just about 0.14%. Rima.
Okay, let's quickly run you through some of the big winners and losers in the large cap space. On the way down, M&M top loser, down 6%. Street is concerned about their capital allocation policy. Tech Mahindra posts the revenue margin miss has slumped 3.5%. Consumer names came in for weakness. Tata Consumer, Britannia, Nestle under pressure. Axis Bank too. The Street is unhappy with the operating performance. On the gaining side, Cipla, top gainer, fresh high, 10% up move. But the other pharma names also followed suit. And even something like a Loris Labs, where the numbers were weak, it's going to end up in the green.
Yeah, because they've not cut their guidance at least. So they're giving some optimism and hope for the rest of the year. And the market latched on to that. Some more good reactions beyond the index. You've got Colgate with a 7% up move, looking very, very smart. Birla Soft, again, 6.5%. Vesuvius, some of the smaller names, 20% circuit on Vesuvius with a huge expansion in margins that they've reported. Ujjivan Small Finance Bank, Westlife, these are all, I'm just reading out positive result reactions. Beyond earnings, Marico, for the plant protein company that they're buying a stake in, market kind of liked the sound of that. So 4.5% up on Marico as well. Negative result reactions, RVNL has fallen because of the OFS overhang, the government selling some stake in the company. So these were some of the prominent names on the downside. But guys, I have to end with the listing of the day, and it's been another phenomenal one. NetWeb, company that makes very high-tech servers, right, Rima?
Yeah, supercomputers.
Supercomputers, absolutely. Yeah. It's a super powerful display and a super listing as well, for sure. Okay, well, with that, we're out of time. So thank you very much for being with us on this edition of Closing Bell. But don't go anywhere, because our Thursday special big deal is coming up right after this break.